Well, let's welcome in Richard Harris, who's with us, Chief Executive at Port Shelter Investment Management. Richard, good to have you with us here. Thanks very much for your time. Of course, I mean, nothing to talk about with regards to the US with the holiday last night. But, the global kind of conversation, of course, has changed after the last FOMC. Pretty much everyone now on the side of the fence, which is that rate hikes are behind. I don't think there are any holdouts now. There were a few who were saying that, this cycle is not done yet. But I think very, very few, if any at all, on that side of the fence. Your thoughts, Richard, as we kind of get into the end of the year, which is also seasonally a pretty good time to be in markets. Go on. Richard, can you hear me? Okay, I think, I'm not sure if he can hear me.
Yes, can you hear me? Hello?
Okay, now we can hear. Richard, good morning. Sorry, I'm not sure if you heard the question, but...
Yes, I heard the question, yes.
Okay.
Yeah. No, you're quite right. Everyone's capitulated and agreed that, yes, interest rates probably aren't going to go up. And I think that's right. They probably aren't going to go up. I think it's also true that they're not going to come down as fast as the market thinks. But, we're at that time of the year when everyone wants to feel a bit happier, optimistic. You guys have got a long weekend ahead of you. And I think that the Santa rally is probably coming a bit early this year, and will probably persist because not only is it, end of the year in December, and people want to make sure their books look right, but also we do have this reasonably positive news around that maybe interest rates have reached the peak. The economies are going quite well. And if you look at, the US vital statistics, inflation, interest rates, economic growth, unemployment, whatever number you want, it's a Goldilocks scenario. It all looks pretty good. So I think that's going to buoy the markets through to the end of the year.
Okay, it's a Goldilocks scenario. That's always a great way to start the morning, right? With this optimistic view. But Richard, as you said, I mean, this is the end of the year. People are taking their time off. They're going to perhaps make their financial decisions at the start of the year, their investment decisions as well. What would your recommendation to them be? In 2024, which is the top market on your list, and what's the big trend that you see?
Well, they say a week is a long time in politics, and 2024, I think, could be quite a long year. Of course, we've got an election year in the US, and that's going to take more and more of the news. And, who knows whether that's going to be good news or not. So that's going to be a bit of a worry. But I think, if you're looking at 2024, the first quarter, I think people will still be sanguine. We've seen interest rates go up. We've got two wars going on, and still the markets have held their own. And earnings have held their own. So I think the market's going to be buoyed like that for, say, the first quarter. Going into the second quarter, you're really just subject to events, what might come along. I don't think markets look fragile, but if one or two things happen and we start getting slowdown in growth, then it could be fragile, maybe by the second quarter. But, it's still tough not to be in the tech sector. We've had this AI bubble more recently. We've had the AI story over the last week. So tech, artificial intelligence, all these kind of things are still going to be the place to be, even if they remain volatile.
Hi, Richard. Morning. Good to see you in, to hear you in, rather. In the past, you have maintained this view that India will do well. The FI money, or the foreign institutional money, has thinned out a little bit. What we understand is that, post the state election results, maybe we'll see a gush of inflow. If, in fact, it goes according to the ruling BJP is, in that direction. Do you think the same, or do you think the central election is something that most FIs are looking at, and then we'll have to wait till the middle of 2024?
I think the election is pretty important, but if we're going to see more of the same, then politics isn't going to have much of an impact on the market. The market's been quite good. We are seeing a transfer of some of the FDI from China, I think, to India, and that's been very supportive. But I think many companies are finding that the moves, say the industrial moves from China to India, is still not easy. China has been a major factory, and moving plant and equipment to India is difficult. For instance, anecdotally, I know somebody who's actually doing it with their business, looking to do more manufacturing in India. And a lot of the things are still at a fairly early stage in terms of getting quotes and prices and getting equipment together. I think that will happen, but I think it'll be slow. But I think that's still a positive trend for India, that more FDI will be coming in, especially in the manufacturing and offshoring sectors.
All right, Richard, we'll leave it at that. Thanks a lot for joining in. And, speaking to CNBC TV18, have a great weekend. Happy Thanksgiving to you. And thanks a lot for always being with us on the channel and giving us your views.